Investors and traders, welcome to the channel. Today is 21st of July 2024. Hope everyone is having a great weekend. In this video, we'll be taking a look at the key US stock indices. It's going to be a little bit of a shorter video. We'll just mainly focus on the NASDAQ, and we have seen some volatility come into the market the past week. So we'll be discussing that more in detail. As always, this video is for educational purposes only, and it is not a financial advice. We are looking at the daily chart of the Dow Jones Industrial Cash Index, and here we have got this timing model that we have been using for quite some time now. We had a key date come in past week around 17th of July, and we have seen some pullback happening in the marketplace. We have another date coming in on 26th of July, which will be the Friday this week, the next coming week, and 29th of July as well. But the key one, so these are the minor dates, and the key date is actually around the 29th of August to 3rd of September. That is going to be a major one that we are watching for. Okay, so let's move into the NASDAQ futures charts, and here we go, and we'll take a look at on the weekly charts. There we go. So we have this big pattern completion, and it's really a textbook formation. We don't always get patterns as clean as what we have here, and a really long term. I'm not going to go into the details of this pattern. I've discussed this many times over the channel, so you can maybe watch some videos from the archive. So what happened last week is we saw a fair amount of selling pressure coming in the market. Let me actually try to blow it up here. And of course, we can see that what the market has done is it has taken the lows out of the past 4 weeks in just 1 week, 1 week's price action. So that's quite a lot of selling that came in. One interesting thing is that we have seen this kind of selling come in this market previously as well. Most recently in 2024, 15th of April. And the interesting thing was that there was just no follow through the next week, and actually market formed an inside bar, and it just began to march on. So, and we have had a similar kind of situation back the week of 2nd of January, so around 5th of January 2024 as well. So just want to look at what the price action has been since the beginning of 2024. Of course, this time could be different, and this is why we are discussing here that what we have seen this past week, whether it is a pullback, which is quite normal to have in a bull market, and especially after completing our pattern and the timing coming in, our targets were met. So some sort of a pullback is actually expected, but it has been pretty quick, and that could be because fear is actually a greater emotion than greed, for example. So maybe that could be one of the reasons. So the interesting part is the question we are trying to answer, whether it is the start of something bigger, or whether it is a correction where the market goes from from sideways to down for a few weeks, and then we get a nice opportunity to buy the market, and we get a resumption in the uptrend, and then the market is actually able to make perhaps a newer high, even by a small amount, and then that could be a more significant high. So that possibility is there. And what happens that if that possibility is not there? So what kind of price action or price levels that we could actually look at? So we'll try to answer that by actually taking a look at some of the key levels to watch for on the price action, and also we'll actually take a look at the statistics as well. Okay, so what I'm going to do is I'm going to move over to the NQs, but we'll take a look at the September contract. And the reason is that we have been actually using the continuous contract, and when we had the rollover into the September contracts, there was quite a lot of movement, and because the levels were different quite big differences actually this time around. And sometimes I find that the rollover or the construction of the continuous contract might not be as smooth. That's more for the data coming out of the trading view than any other thing. So that's why I think it's probably to look at the front month contract, which is the one which is being most actively traded at the moment. So here, this is the weekly chart of the September contract for the NASDAQ 100, and we can see that the past week the market came pretty close to the 38.2% retracement, but not quite. It didn't quite get there. Another thing is that right very close to the 38.2% retracement was also the minus 2 standard deviation level, based off the calculations from the VIX end, which is the volatility index similar to the VIX index, which is for more for S&P 500, but this one is for NASDAQ. So yesterday I did a video which I highly encourage you to actually watch, because in that we discussed what could be the potential reasons other than the technical reasons of pattern completion that we might be seeing volatility come into, particularly in the growth and tech stocks. And we discuss the rotation as well, and we also discuss the possibility of Bank of Japan intervening in their currency markets, and that might be having an impact on really high flying equities, the MAGA stocks. So please watch that video, and in this video we'll focus more on the technicals. And the other thing is we have some excuse me, timing coming in as well. In fact, we have a minor timing coming in next Monday, 22nd of July, and then we have this 5th of August. So with timing we always give it to 3 trading days on either side. Normally I like to see 2 days of sometimes the timing come in a little bit early, sometimes a little bit late. So 2 to 3 trading days either side. And then we have this really key date coming on the 5th of August. So this means that the market will remain the sideways to down till the 5th of August. That's the kind of maximum time I would like to see this market to complete its corrective cycle. And the key date to really watch is here, this 18,865 and 3/4. So this is the level that we are watching. It is very close to the 61.8% retracement, and it is also where we have the structural support. So the other thing is that in this, if you look at the correction which took place, this is the market symmetry concept last year from the month of July, and which finished in October of 2023. This level is actually very close to this as well, so it means there is this market symmetry, although that correction took several weeks, because where we are now it could actually be completed in 3 weeks possibly, if the market was to go and test these levels. So this is the key level that we are watching, structural support around here, 61.8%, and also the market symmetry. And then of course it all depends on whether the market is going to break this 38.2% retracement level. The other part is and I'm gonna now jump over to the daily chart. It's that the standard deviation concept that we have been looking at. So I'm going to give the standard deviation levels for next week. And for NASDAQ, we are actually taking a look at the data for the volatility coming in from VIX N. So the levels will be a little bit different, and in my opinion, in my back testing, the VIX N for NASDAQ is has more accuracy. So this is the daily chart for the NASDAQ 100 futures. And what we saw last week was the market coming really close to 3.2% retracement, as we saw on the weekly chart, but it also came very close to its -2 standard deviation level, but it did not close below that. It came very close to this using the VIX N. Using the VIX index, it did close below that, but we are going to go with the VIX N, which is the volatility index to be used for NASDAQ. So it came very, very close to that. Now, what is the significance of this? In the past 18 months, especially when we look at it from the perspective from beginning of 2024. We have seen the market go at right at the minus two standard deviation levels on three occasions. So coming very close to it or reaching the minus two standard deviation levels on three occasions. We have this on the 5th of January, we have this on the 19th of April, and more recently 31st of May. And what we have also seen is that market put in a bottom and rally. So towards the beginning of the year, it actually rallied for about 10 weeks and 14%. And when we put it 19th of April, it rallied actually 10%, and took about roughly 8 weeks, 7.5 to 8 weeks. And then more recently, 31st of May, we saw a rally actually take place. Um, for about 14%, 15%, and roughly 10 to 11 weeks. Now, the interesting thing is that some of these rallies have actually come in, or the bottoms have come in pretty much right at these Fibonacci retracement levels, so which 38.2% being the really notable one, because the rally of it was pretty significant. Now, what it is telling us is that this is what we have seen occur thus far in 2024, and what is really important to see is whether we are going to see a repeat of this behavior, and where the market closed last week, and we have the new standard deviation levels, which I'll put in the description. I'm not showing this right now in the video, but I'll put these in the description. You can actually grab those from there. Then the chances are that we can in fact see the market actually not go down that much. However, if the market begins to close below the minus two standard deviation levels, then that becomes a direct market feedback that something has changed. So we'll begin to pay much close attention to that, and also that will actually tell us that perhaps the market might have put in a high at a larger time frame, and which means that we could have the market going down for a longer period of time than what we are looking at. So we discussed all these technicals, we discussed the timing in the NASDAQ, we discussed these key price levels that we are watching for. Really, on Monday we are watching for the break of the 38.2% retracement level that I've shown you, and then the concept of this statistics, the minus two standard deviation level. So if we begin to get a different feedback coming from the market, that will just give us the data, the direct market feedback that okay, perhaps something has changed. So thank you very much for watching the video. Just a really quick and short video. I wanted to really focus on the NASDAQ's technicals, and I highly encourage you watch the video from yesterday, in which we discuss more markets as well, such as the treasury markets, and if there is a possibility of a Bank of Japan doing more interventions, and if they decide to do some intervention in the US treasury markets, what could be the impact. And then we also discussed at the key pattern formations for the US dollar. So I think you'll find that video pretty interesting, and this time I also included some macroeconomics, such as the unemployment data as well, and the kind of data Fed has actually mentioned in their FOMC meetings last month in June, and what could it mean for a possible rate cut coming possibly quite soon. So please watch that video. Thank you very much for watching the video. Good luck, good trading, and speak to you guys soon.